In the previous video, we explained the basic concept of the moving average crossing strategy and looked at a few real chart examples. However, a moving average crossover alone does not always indicate a strong setup. In this video, we'll show you how to identify fake crossovers, understand the difference between strong and weak crossovers, and look for better setups using proper confirmation. If you haven't watched part 1 yet, you'll find the link in the description. Now, without wasting any time, let's get started. We've added our favorite currency pairs. The two moving average settings remain the same, so keep the colors and styles as shown on the screen. Now, let's move directly to the setups. First, we'll explain a couple of examples, but we won't go into too much detail. If you'd like a complete explanation, make sure to watch part 1. In this video, we'll build on the basic concepts and move forward from there. In this chart, our entry would be slightly late, so we'll avoid it and look for another example. Here, we've arrived at the right time. As you can see, both moving averages are about to cross, so we'll wait until the crossover is fully completed. Now, you can see that both moving averages have completely crossed on this red candle, giving us a downward setup. The final confirmation comes from the stochastic oscillator, which is moving from the upper zone toward the downside. Now, you might be wondering why we're still waiting before entering, even though both moving averages have already crossed. The reason is that the crossover has just happened, and we're watching this candle to see whether it breaks the previous low. There's also a chance that a strong bullish candle could form, causing the moving averages to separate again and making the crossover less reliable. So we're simply waiting for a small confirmation to make sure the price is actually continuing to move downward. Based on this confirmation, our first downward entry is here. Let's see how this setup performs. In a moment, I'll also explain which types of charts can be risky for this strategy, so keep watching carefully. As you can see, this setup worked well. We also shared this analysis on our Telegram channel. If you have any questions, feel free to ask us there. You'll find the link in the description. After waiting for a while, we found a much better crossover setup where both moving averages crossed clearly to the upside. At the same time, our second indicator, the stochastic oscillator, is also moving upward from the oversold zone. This is a great example of a high-quality setup. However, because of this strong bullish candle before the entry, you might feel a little uncertain. The key is to stay patient and wait for a better entry if needed. If you think it's necessary, you can wait a little longer before entering. Just avoid entering too far above the setup, as the trend may reverse after an extended move. That is why it is important to understand proper analysis, so you can handle the strategy under different market conditions. Now, let's see how this setup performs. As you can see, this example also worked well, and we had shared the same analysis here as well. Now, it's time to look at a few chart examples that provide low confirmation. Before that, we'll understand how our indicators appear on different types of charts. This will help you analyze setups more effectively and recognize when a chart may not be worth trading. If there's anything you don't understand, feel free to ask us in the comments or on our Telegram channel. You'll find the link in the description. Now, let's take a look at some of these chart patterns. If we look closely at this chart, we can see that the setup appeared 3 times. First to the upside, then to the downside, and then to the upside again. Here, it looked like a downward confirmation was about to form, but instead, the moving averages crossed back to the upside. This tells us that the upward momentum is stronger, so taking a downward setup here could be a mistake. This is a good example of why it's important to analyze the overall movement instead of relying only on the crossover. Now, let's move on to the next example. Here, the stochastic oscillator is in the overbought zone, suggesting that the price could start moving downward. However, instead of crossing to the downside, both moving averages have crossed upward. Because of the strong bullish candle, we considered a 4-minute downward setup, as there was a possibility of a reversal. But if you're new to this strategy, this type of setup may not be suitable for you, and it's easy to get influenced by emotions. It's better to avoid these situations until you're confident with your analysis. Now, Let's move on to the next example. After some time, on the same chart, we finally get a proper downward crossover. This setup makes much more sense because the market had already moved through an upward crossover, then a downward crossover, followed by another upward crossover. So, seeing the price cross downward again here is a more logical market movement. At this point, all of our confirmations are aligned: the moving averages, the stochastic oscillator, and the overall price action. Now let's see how this setup develops and whether it gives us a successful result. I hope you found this video informative and that it helps you analyze charts with more confidence. If you have any questions, feel free to ask them in the comments. You can also check the link in the description to learn more from our chart analysis and stay updated with future setups. Thanks for watching, and I'll see you in the next updated strategy video.